how's everyone today? I just want to thank you guys for coming in. Is everybody able to hear me? Okay, great. I'm really disappointed nobody come down and sit in the front here this morning. I looked around and saw everybody sitting in the back. We had a $100 bill taped down here for somebody that was going to come in and kind of get you guys started with your financial freedom. I'll just tell you a little bit about myself. My name is Wes Wilkes. I work for Core Credit Union in Statesboro, Georgia. Core is Southeastern Tech is a SEG group for Core Credit Union. So what that means is you're a select employer group. At some point, people with Southeastern Tech came to Core and said, we would like to be members of the credit union. In order to be a member of the credit union, you had to be part of the select employee group. So that's how we're here today, and it's the opportunity we have to come down here and speak with you. We really appreciate the opportunity. It's not often we're able to get out to this area to speak to you about Core Credit Union. I know there's not a lot of credit unions in this area, so I just want to tell you a little bit about Core Credit Union and tell you a little bit of the difference between the credit unions and banks. Firstly, if you come into a credit union, we operate just like a bank. When you walk in the front door, you're going to see us as any financial institution that you may have here in town. We do all the same services. We offer credit cards, we offer auto loans, we offer mortgages, we have savings accounts, checking accounts, certificates of deposit. We offer all the same products. The only difference is on the back side of things. The way we operate on the back side of things, we're not for profit. So what that means is the money that we make, we return to you in higher deposit rates when you deposit your money, and we charge you less interest when you borrow money from us. So it's more like a cooperative. The money that we make is not going to a select group of shareholders. It's actually going to all our shareholders because we redistribute the money through those higher deposit rates and lower interest rates on loans. So that just gives you a little background on what the difference is between a credit union and, say, a bank is. We're not a finance company. We have really great rates. Most of the time, our rates are better than what you're going to see with your banks, and that's just because of the way we do business. So just want to let you guys know a little bit about the credit union before we start talking about financial freedom. As we started developing this program, what we found is I'd spent 9.5 years as a branch manager at a larger credit union over in Swainsboro. And over, I dealt with members who had problems with their credit. And as I started looking at what problems they had with their credit, I started finding out that they were having problems with their savings, not having savings. And then we started talking about how they had a budget. Did they have a budget? And we found that they didn't have a budget. And because they didn't have a budget, they weren't able to save. And because they weren't able to save, they weren't able to have money set aside when they had unexpected expenses. So we put this PowerPoint together to talk to anyone in the community who was really willing to listen, wanted to make a difference in their credit, wanted to make a difference in their personal finances. And we also wanted to show you the cost of having bad credit. So those are some of the things that we're going to cover today. I think Julie's handed out a 3-step spending plan. The 3-step spending plan is for you to take home, is for you to look at, is for you to put down real world numbers, your numbers, not numbers that we create for you, but your numbers dealing with your finances. To determine how much you are spending, how much money you're making, and see whether you have money left over to have savings. If there's money, things that need to be cut out of that, then you're going to have to cut that out. But what you need to have is a positive sum when you get down to the end of that 3-step spending plan. Usually we're in a lot smaller groups, so we can work together with you guys a lot more closely. If you find a need that you want to call us, we'll make our information available to you at the end of the presentation. But we would love to talk to you guys about it personally. I know it's really hard in a big group to talk about it. We'll leave some questions open at the end for you to be able to talk about any questions that you may have. So feel free to stop us, raise your hand as we go through the presentation, because it's designed for us to talk to you and talk to you about some of the things that we have going on as we go through the presentation. We'll get started. So where do we start? When we start talking about creating a budget, smart saving, we want to talk about 3-step spending plan. And we've covered that just a little bit now. So we talked about deciding to eliminate and cut back on some of your expenses. If you have too many expenses, it may be you're overpaying on your cell phone bill. Maybe you're overpaying on a telephone bill or television, cable. It may be that you have too much. Maybe you've got too many recreational items as far as toys, what we like to call them, or RVs, ATVs, side-by-sides, those kind of things. Maybe those things we need to eliminate. And maybe other things in your life that we have to eliminate. But we've got to get to where we have a positive budget. So what we want to do is we want to set a budget that we can live within, and we want to follow it. We want to open a savings account with additional money that we're starting to save, and we want to deposit it for those unexpected expenses that's going to come along. Obviously, one of the biggest things you can do to manage your budget is to balance your checkbook once a month. And that's one of the things that I found very common when we were dealing with people who were having problems with their finances. Is they would come in and they had an overdrafted account, and when their account was overdrafted, we'd start talking to them about, where's your checkbook? Have you managed to register? Have you balanced monthly? And we found that they weren't doing that. So one of the biggest things you can do is balance your checkbook. That sounds too simple, but it really is the case. Just balance your checkbook. It's simple math. Adding and subtracting is not something that we had to go to a graduate school to learn how to do. Typically, you're learning it first to second grade, and it's carried throughout your whole life. It just takes a little time. And when we talk about balancing your checkbook, one of the things that I like to ask people is who in the audience would pay $1,000 to have somebody balance their checkbook? Nobody, right? If you don't balance your checkbook, we've seen people have $1,000 in overdraft fees in a year. That's essentially us balancing your checkbook for $1,000. Don't let that happen to you. Other things that you can do to avoid the overdraft fees that can occur on your account is electronic services. I'm sure everybody in this auditorium today has some form of electronic device, cell phone, tablet, of that nature. We offer services now that will send you text messages to your phone or send emails to your phone that will allow you to know what the balance is on your account daily. It will allow you to know if your account drops below a certain balance. We also have some things built in that we can help prevent fraud. So there's no reason to allow those overdrafts to occur. So let's talk about the importance of savings real quick. It is the key to financial well-being. If you're not saving money, it doesn't matter how much money you make. For example, if you look at some sports athletes, you can look on any social media these days and you can see sports athletes who have gone bankrupt. Why did they go bankrupt? They weren't managing their finances. It wasn't because of the amount of money they made. So it doesn't matter how much money you make. It only matters how well you take care of your money. It also provides a financial cushion for unexpected expenses. And that's something we talked about earlier. It promotes more savings. As you begin to save and you see the money in your account, it promotes the need for you to want to save more. It's one of those things that gets in you and you see it happening and you want to keep doing it. Again, we talked about it lowers your need to borrow. It provides a source of retirement. We'll talk about some of the keys to successful savings. One thing we want to do is set a goal. We want to think smart, create a budget, pay off existing debt, and minimize future borrowing. So let's talk about those goals. Short-term goals are goals that's going to be accomplished within 2 years. So we're talking about examples of getting your finances in order. If you're having problems with your finances today, you're not going to be able to get your finances in order tomorrow. If you go to some of these quick financial counseling places that talk to you about, we're going to get your credit fixed for you, you're going to pay them a fee, guys, that don't happen. It doesn't happen. It takes years to get your credit fixed. It takes you doing the right things and making your payments on time, taking care of any outstanding debts that you may have out there. That's what's going to get your credit taken care of. Not some quick financial counseling class or service that's going to charge you a fee to pay your bills. Mid-range goals. We're talking about accomplishing something in 2 to 5 years. Some of you may, at this point, want to start saving for a down payment on a home. Then we talk about long-term. Long-term is goals that we're going to accomplish over 5 years or more. An example of that would be retirement. As we talk about thinking smart, we talk about setting specific goals. How much do you want to save? We talk about measurable goals, the desired amount of money you want to save. Achievable goals. We don't want to set something that's too hard for us, because if we set it too hard, it's not really a goal. If it's too easy, it's not really a goal. We want to set something that's attainable. When we talk about realistic, we also want to talk about something that's reasonable. Is it really reasonable for us to save $1 million over a few months? Is it reasonable for us to save $1 million over a couple of years? Probably not. So we want to talk about setting realistic goals. Can we save 10,000? Maybe so. And then we want to talk about time bound. What period of time do we want to save this money? Does anybody have any questions about that? Because we're going to go into credit pretty quickly here. Okay. So when we talk about credit, if we'll go back for a second there, Julie, this is one of those things that kind of sticks out to me. I had a lot of people come into my office and they were in despair. Always in despair with what was going to go on, how they were going to get their next car. They couldn't get to work because the car broke down. They needed a car. They had bad credit. And they always felt trapped. They felt like they were in this endless cycle. So what we want to do is talk to you about how to get out of that cycle. And we want to talk about your credit, the good and the bad. So who can give me the number one question that we get regarding credit? How about what's my credit score? Is it good? Probably not. Hopefully so. But we're going to tell you how to get there. We're going to tell you how to get a good credit score. But I want to say something about the credit score. A lot of people get worried about their credit score. The credit score is only a result of what's on your credit. So if you made your payments the way you should have made it, you're going to have good credit. If you had long-term payments where you pay things over a period of time and you made payments on time, you're going to have good credit. If you've not done credit, where you've paid things on time, you're going to have a low score. So your score is only a result of your behavior. We're also going to go into talking about why credit reports are important to us as a financial institution. How do you get a copy of your credit report? Now that you have it, what do you do with it? That's a lot of things that we've experienced is you may have a copy of your credit report, but you don't know what to do with it now. We talked about the financial counseling services that are out there, but you don't need those. We're going to give you the information you need to take care of your credit. What can you do to improve your score? And how much does it cost to have bad credit? This one's always really fun to me. So why is credit reports used in lending institutions? This is something that we've talked about to a lot of classes. I know Julie and I, we go out to a lot of schools. We go out to a lot of businesses, and we talk to a lot of professionals. And when we start talking about a credit report, understand we don't know who you are a lot of times when you come in the door. Now, we build a relationship with you, and once we build a relationship, we have an understanding of what you're going to do, how you're going to act, how you're going to pay your bills, and we start predicting outcomes. So I tell people all the time that your credit report to us is like trust with a friend. And we define trust as a series of events over a period of time with predicted outcomes. If you think about that, that really applies to everything that you do, because if you've got your best friend is done, they've been with you, they've been by your side, they've done things, and you start predicting how they're going to react in certain behaviors. Well, the credit report just gives us an opportunity to look into you as a borrower and determine how you're going to act once we give you credit. So some of the things that the credit report provides to us is it provides your payment history, provides us how much money you owe us in general. It gives us the length of time your account's been established, the types of credit that you're currently using, and the number of new accounts that you may have. You may ask, why are these important? So let's kind of go back over those. We want to see your past payment history because we want to know how well you paid others. We want to know how much you owe because we don't want to put you in a situation where you owe too much. You can't pay your bills. We understand that if we put you in a situation where you can't pay your bills, we're affecting not only you, but also your family. And that's very important to us. The length of time the accounts have been established. Are you going out and borrowing on a frequent basis, or are you going out and only getting credit when you need it? Is it big items, or is it frequent small items? 500 here, 1,000 there, constantly borrowing. Those are the things that we're looking at. The types of accounts you're using. Are you going to finance companies? Earlier I told you that credit unions are not finance companies. We're a financial institution. Are you going to banks? Are you going to payday lenders? We want to know that because we want to know what type of behaviors that you're having. Again, you want to stay away from the payday lenders. You want to stay away from the finance companies, not only just because of the high interest rates, but also because, believe it or not, it actually affects how your credit's perceived. We also want to look at the number of new accounts you have. Why do we want to know that? We want to know about the new accounts because we want to know how often you're going out and borrowing. Maybe you've gotten good credit. Maybe all of a sudden that you've established that you can get lots of things that you've never been able to get before. That may be uncontrollable. that may be some point that you get where you can't pay those bills anymore. Maybe you didn't come to us, and maybe the other lender was not responsible enough to say, hey, you need to stop. This is too much. You're going to get yourself in trouble. So that's why all these things are very important to us. So how do we get a copy of our credit report? We want to go to Equifax.com. We want to go to Experian.com, TransUnion.com, and I think all this is in your handout, so you can keep it. And AnnualCreditReport.com. I know there's a lot of commercials on TV. There's a lot of commercials. If you pull up any website, you're going to see something. Get a copy of your credit report, get your credit score, all those things. The top three here are your major credit bureaus. These are the credit bureaus that we use when we determine how your credit looks. The fourth one is set up by the U.S. government. You get a free copy of your credit report once a year. You don't have to pay for it. And the good news is when you get a copy of these credit reports, it gives you all the information regarding all your past history with any creditor. It also gives you a phone number to contact these financial institutions or lenders in whichever case it may be. In that, one point that I want to hit on here is if you get a copy of your credit report from some of these other companies, the scores and stuff that you get are not always accurate. What you'll see is there's always a small disclaimer at the bottom that says, well, we got a copy of this report and this score is reflective of a previous report, and you don't have accurate scores. So don't use the scores on those reports as any indication of what your credit actually looks like. The annual credit report will TransUnion, Experian, and Equifax will all give you information on your creditors. It will give you phone numbers to contact your creditors, and we're going to talk about that in just a moment when we start talking about, what do you do next. So what's next? We're going to review our accounts once we get a copy of the credit report. We're also going to look for any errors or delinquencies. Maybe you didn't have an account. Maybe somebody had committed fraud on your account before you were even 18, because you're not responsible for credit until you're 18. So if someone took your Social Security number, they got credit on it, they didn't do the right thing, you may have a delinquency on your credit report that you never knew about. And it may be affecting your credit, it may be affecting the cost of the funds that you borrowed now. Those are things that we want to look for. Maybe you didn't make a late payment to a company, but maybe they thought you did. All these things are very important for us to pay attention to. So what we're going to do then is once we look for the errors and delinquencies, we're going to contact these companies and we're going to talk to them about what negative credit history may be out there. We want to talk to them about settling those debts. Now this is the same kind of thing that these credit financial services will do for you. They will also call these companies. They will also negotiate a payoff on these delinquent loans that you're going to have. But here's the problem. They're going to take a portion of that money and they're going to keep it for themselves. If you do it, all the money that you send in goes directly to these creditors. You can negotiate a lot of these negative credit history or negative credit files that you have for probably 50% of what you actually owe. You can do that yourself. Save yourself some money, save yourself some time, and do it yourself. We talked about agreeing on the settlement. Also, another thing that's on there is you get a credit dispute form. At the end of any of these credit reports that you receive, you're going to get a credit dispute form. What you can do with this credit dispute form is fill out and say, I didn't make those late payments. What it does is you send that into the credit bureau, and when you send it into the credit bureau, they have to engage you. They have to talk to you. They have to address your request that you did not make those late payments. Now, if you made the late payments, you're going to have to deal with that. But maybe something happened that you didn't make a late payment, or maybe it was something that wasn't in your name. Maybe it was something that was fraudulent. All those things should be considered. But you can do all this yourself, and you can do it once a year. So I would encourage you to always get at least one credit report once a year. Have someone review it with you. If you don't feel comfortable with it, you can always send one to us, and we'll be happy to look at it. You should be able to go by one of your local financial institutions, and they would be able to help you. I would hope they would do that for you. We will. So these are just some of the things that you can do when you get a copy of your credit report. So how do you improve your credit score? We make payments on time. You keep your credit card balances under 50%. Let's talk about that real quick. Why does that matter? Why does it matter if we're below 50% on our credit? The credit bureaus actually look at your credit utilization. And what they're looking for is to see how well you can manage your credit limit versus your debt. They don't want to see you over 50%. If they see you over 50%, then what's going to happen is your credit score is going to go down. So if you've got credit cards that are close to the limit, do all you can to get them off the limit and get them as close as you can or below 50%. You want to minimize the number of inquiries or new lines of credit you have. Why is that important? Well, again, we talked about earlier, we talked about the fact of you didn't want to have a lot of new inquiries, right? So a lot of times what happens is, say you go out and you say, I wanted to buy a new car. You go down to the dealership, the guy at the dealership asks you for your credit information. He wants to pull your credit. Typically, they're pulling your credit 5 or 6 times. You really don't want your credit pulled 5 or 6 times in a year. One trip to the dealership will get you 5 or 6 times pulled on your credit. And each dealership you go to, the same thing's going to happen. So I encourage you, when you go to dealerships or you go to finance something, it's always good to go into your financial institution first, get your credit pulled, get your approval, and then when you go into the dealership, you're not getting all these inquiries. Every time you get a hit on your credit report, it's going to lower your score. So we don't want more than about 6 credit reports per year pulled on our credit files pulled per year. We talked earlier about avoiding the title loans. We talked about the payday loans and some debt consolidation loans. And when we talk about some debt consolidation loans, what do we mean by that? What we mean by that is this. There is some really good debt consolidation loans out there. There's also some really bad debt consolidation loans out there. Never do we want to pay more interest than we're currently paying. But there's a lot of anybody has a credit card, and I'm sure they get a thing in the mail at least once a month, I do, that says, hey, let's consolidate all your debt. We'll be happy to do that for you. And what you find is the interest rate's pretty high. But what we've done, we created a debt consolidation loan last year. We talked about it, and we said we really want to help our members. We want to go out and do something nobody else is doing. There's a lot of debt consolidation loans out there that are bad, but we want to do something that's going to help people get out of debt. Not only are we going to help them get out of debt, but we're going to help them get out of debt in a certain period of time and at a great interest rate. We're currently running an interest of, is it 8.9, Julie? 8.9 on any debt consolidation loan that we can approve. So if we can approve it, we can do it for 8.9%. Now typically we're not doing over $10,000. There may be some circumstances that we will, but usually the loan kind of caps out around $10,000. But we're talking about any loan that you have that's above 8.9%, you can bring it in and finance with us unsecured for 8.9%. You just don't see that in the market. And the reason we're doing that is because we care. And I just want to let you guys know, there is some good debt consolidation loans out there, but just be wary of the other ones that are out there as well. So let's talk about how much bad credit costs. This is always fun. Who in here would pay, let's say $4,300 for a past due cell phone bill? Anybody? No, right? Believe it or not, it happens. And here's how it happens. In the past, and I know cell phones have changed a little bit as far as the contracts go, but in the past we had contracts with our cell phones, right? And we decided, hey, we don't want the cell phone anymore, and our contract went up. A lot of people turned their phone in and they thought it just went away. Well, it didn't. What would happen is the cell phone companies would actually put a hit on your credit saying that you owed them a collection for the remainder of the contract. This is what happens when this goes on. So you come in and you want to borrow a $10,000 auto loan for 5 years with an interest rate of 2.99. It's going to cost you $179 a month and a total interest of $778. Now, if you've got this same cell phone bill on your payment, on your credit report, this is what's going to happen. You're going to you're going to borrow the same $10,000, the same 5 years, and your interest rate is now 17.5%. So how does that change things? If you haven't taken care of that $300 past due cell phone bill, it just costs you $4,300. Guys, there's things out there on your credit. There may be things out there on your credit. I shouldn't say there's things on your credit. There may be things on your credit that's having the same effect on you. And there's no reason for you to allow this to happen. But I want to point out something else. You had to have this car. So you decided to go ahead and finance it at that rate because that's all you can do, right? Well, if you don't fix it between the next loan, guess what happens? The same thing, and the same thing, and the same thing. And it becomes a cycle. And you pay us over and over and over for that small $300 bill that you're going to pay one time. So let's go through a quick summary. We talked about the 3-step spending plan. I encourage you to go home, take that home, put your numbers in it. It's yours. It will be very enlightening, And also, if you have a spouse or a significant other that shares some of the bills with you, they need to look at it too. It's just as important for them to have the buy-in as it is for you to have the buy-in, because if both parties are not working together, it's really hard to make this work. And it is Julie points out something. It is a living document. What we mean by that is we want you to look at it once a month initially. Make sure that you're able to work within that budget. If you're not able to work within the budget, then you're going to have to make some adjustments. As time goes on and you're able to work within the budget, you're going to continue to look at the budget, but you may look at it quarterly, you may look at it yearly, but you need to continue to look at this document over and over and over, because it is a living document, and it will make a difference in how your finances go going forward. Now that you've created the budget, we want you to open a savings account. We encourage you to open a savings account. We encourage you to get a copy of your credit report. Encourage you to learn from your mistakes. We want you to spend less, save more, and seek assistance. And again, we're always here for you. Does anyone have, I know it kind of gets personal when we start talking about credit, but does anybody have any questions that may be general that y'all would like for me to address as far as credit goes? Great. I appreciate you guys letting us come down today and talk to you about CORE. We are honored to be a SEG with Southeastern Tech, and we're very appreciative of Mr. Helms and his department allowing us to come in today, and we'd be glad to do any other presentations that you guys would like to hear from, whether it's buying a new car or something of that nature. We'd be happy to talk to you guys about that. So again, if you have questions, you want to contact us or come down and talk to us individually, we'll be happy to talk to you guys.